So today's video, I'm going to talk about why I'm not all in on gold and precious metals. So there are, first of all, many reasons why people get into precious metals. One of them, quite simply, because perhaps they have trouble saving money, and by buying gold and silver, it gives a bit of gratification of buying something physical, and it also means there's a barrier to spending the money. So I can't go onto Amazon or eBay or wherever and spend this. I have to sell this, get the money, and then go on to whatever my chosen shop is and spend the money there. So there's that little bit of a barrier. It just makes things a bit more difficult. And there is still, like I say, that gratification of spending that some people get, where they have spent money and waited for the postie and got a delivery, something like that. So that could be one reason. And like I say, there are many others. A lot of people are keen on the idea of protecting their wealth from the inflation and currency printing, things like that. And it's certainly a valid point. So one of the reasons why I'm not all in on gold is because sometimes what should happen and what we think probably will happen, it doesn't always happen. It gets perhaps kicked down the road. The can just gets kicked and kicked and kicked. When we were back in 2008, for example, there was a lot of banks bailed out, and in a way they were prevented from going through the hardship of what perhaps could have happened and perhaps should have happened to get people back into some better economic and monetary habits. So things like the debt bubbles and housing bubbles and credit bubbles and all these bubbles and crises and things like that are coming along. They are coming along. There's things happening, but gold, silver, it still hasn't shot to the moon. It hasn't gone, parabolic or anything like this. And despite what we think might happen with the economy, we can still see most days there's some companies doing well and their share prices are increasing. And what we are perhaps not necessarily hoping for, but what we are perhaps expecting or considering as something that might happen, it doesn't always happen. Sometimes, like I say, it just gets pushed on and pushed on. Now, when I look back at my first gold purchase in 2018, the gold price then was under £1,000 per ounce. It was around about $1,200 and something per ounce. And that was actually the cheapest spot price I've ever bought gold. So if I had, decided, right, I'm going to buy this much gold and gone all in on that day, then my gold would have performed better. So if I bought all the gold that I own and I bought it all on that day, my average cost would be lower. But the problem with that is I didn't know whether that was the high price or the low price or what was going to happen. Obviously, over time, we expect gold to trend up in price because of the inflation and because, obviously, the devaluation of the fiat currencies. But when we look ahead, we can't always tell what's going to happen, whether the price will dip for a few years or months, whether it's going to go up or down. So if you've got a good crystal ball, maybe you can help me on that one. But otherwise, it makes sense to average in your position, and therefore you're not exposed to one point in the market. So should the price have come down even further, maybe it would have gone down to $1,000, then I could have bought more at the lower price. But also, if I had done that, back there in 2018, if I'd spent the money that I spent into other investments and other assets, and I just put it all into gold, yes, my gold would be up, 40 to 50%, just the basic bullion, ignoring any premiums on perhaps certain collectible coins. But I would only be up 40 or 50%, which I know is not a bad return, I'll take that, but certain markets and, certain shares, certain stocks have done very, very well in that time. So whilst I do invest for the long term in some things, I do also trade in and out of others. So not necessarily day trading as such, but I don't mind holding a good company for a period of time and then taking some profits. So I've no problem taking profits in an asset class. And for me, gold and silver, mainly gold, is just part of my long-term savings. Let's just take another look at that because I love the dragon. And for me, it's just part of the long-term savings. So I don't expect to get rich off gold or silver. You know, I expect it will maintain some purchasing power for the future. And, you know, I obviously want it to at least do okay. I'm not expecting to lose money or be worse off, because then I would just obviously stack cash instead if I thought that would be the case. If I were to, you know, go all in on other assets like property or like shares and stocks, you know, there are times where a lot of markets can be going down for quite some time. And if you are diverse and spread over a number of different assets and a number of different asset classes, you get to enjoy things like, you know, capital gains, which is when something goes up in value, but also cash flow, which gold doesn't have. You know, I don't get any cash flow from holding gold. It just is what it is. It doesn't multiply, doesn't grow. It is just the same piece of gold in the future. Whereas, like I say, with shares or with stocks, if you're in America, the price can go up, it can go down as well, but you can also get paid dividends, you know, things like that. So there are advantages there. And if you're looking at property, obviously property prices can go up as well as down, but generally, you know, trending upwards. There's a higher demand for property, and, you know, prices have risen over time. As we can see, you know, if you just go shopping for a house in the UK at the moment, you will see that. There is obviously, you know, cycles in the market where prices did go down, did go up. But at the same time, you know, if you've got an investment property, a rental property, you can be getting rent from that, which is, again, more cash flow and so on. So whilst it looks good on paper to go all in on gold, you know, back then when I first started, I would have missed out, and I wouldn't actually be as well off as what I am now, because I would have missed out on, you know, gains in other markets. So there may be a time when everything does collapse, the economy tightens up, and, you know, we go into all sorts of crazy situations. But until that time comes, you know, we won't know. We will know with hindsight whether it was a good position or a good move, but we won't know at the time. So, you know, today could be the cheapest, lowest gold price we ever see, and it could just go up and up and up from here. But again, it could also go down. So, you know, if you were buying silver in the 1980s when the Hunt brothers were around, you might think, yeah, it's going, you know, it's going to be to the moon, and you've just never seen the price get back up there since. So we've always got to be cautious, and I think it's good to be, you know, diverse into at least a couple of different assets, depending on, you know, your strategy, depending also on your goals, and depending on, you know, your situation. So somebody who is younger and perhaps has a working life ahead of them can afford to take more risks, whereas somebody who's, you know, getting close to retirement and has already built up their pot of money, pot of capital, they are possibly going to be a bit more defensive because they don't want to risk it and lose it now, because they haven't really got those working years to build it back up. So obviously it isn't a financial advice video, but just some considerations, and to help answer one of the questions I've been asked recently, you know, why or am I all in on gold, and, you know, why not, or why am I? So hopefully that answers the question. Hope you enjoyed the video, and we'll talk soon.